Which is the most important part of the profit and loss accounts, and why is it split into sections?
Let's have a look at one together. We have based our example on a very similar business to 180 Creative. At the top of the profit and loss statement, we show the sales split into different sales categories, and we can see that the company has a turnover of £400,000. The sales figure is the total of all the invoices you have sent out, whether they have been paid or not. And if you make cash sales, for example you own a shop, then these sales will be included here. The next section of the profit and loss account is showing us the cost of making those sales. These are the items purchased which relate directly to the things your business sells. So here we will have the total of the print costs, the photography costs, etc. We can see we have used freelance consultants and a press cutting service. The invoices we have received from these suppliers are totalled, whether they are paid or not, and shown here.
So when we total the direct cost or cost of sales here and deduct these from the total sales here, we arrive at our gross profit or gross margin. This is often calculated as a percentage of sales as shown here. This business has very low cost of sales, 15%, although you could argue that the employed designers' wages could be shown in the direct cost section, as their work is directly needed to create the brands and designs. If you look at the gross margin at the end of the year, i.e. the right-hand column, you can see that the gross margin has dropped to 85% as his cost of sales and freelance costs have increased.